AI Finance Daily, where artificial intelligence meets your money. We need to talk about OpenAI's business model problem, why 100M users isn't enough to be profitable. You may think that having 100 million users is the golden ticket to profitability in the world of tech startups. After all, it feels like the ultimate affirmation of success. But when it comes to OpenAI's business model, this wealth of users is far from a guarantee of financial sustainability. What's behind this paradox? The truth is, user count alone isn't the measure of a company's financial health. It's what those users generate in revenue against the costs of serving them. OpenAI has witnessed remarkable growth, yet the scale of its expenses casts a long shadow over its potential profits. It turns out having millions of users isn't enough if those users don't translate into significant revenue. Consider the model they're using. To generate substantial income, OpenAI relies on subscriptions and API usage. Businesses and developers integrate its technology, but the revenue derived from API calls can often be less predictable. According to analysts, enterprises may only consume APIs intermittently, leading to fluctuations in revenue that complicate forecasts and undermine profitability efforts. Here's the crux of the issue. Even with that impressive user base, the vast majority may not have the willingness or, honestly, the means to pay for premium services. OpenAI needs more than sheer numbers. It needs a reliable revenue stream from those users. The question then becomes, how can OpenAI transform its 100 million users into real, consistent cash flow? One scenario is to enhance monetization strategies by expanding service tiers or introducing enterprise solutions. Perhaps bundling additional features could entice users, encouraging them to spend more. For example, if they offered advanced capabilities that could clearly impact a business's bottom line, would it lead more companies to pay up? That path, however, isn't without its challenges. The technology landscape is crowded, and competition is fierce. Other AI providers are eagerly stepping in, vying for the same market. This competitive pressure means that OpenAI not only has to showcase value, but must also maintain attractiveness without compromising margins too much. Analysts suggest that as more players enter, the risk comes in potential price compression, making it harder to sustain healthy profits. What's more, there's the ethical and operational overhead that comes with providing AI solutions. For instance, OpenAI has to grapple with the costs linked to ensuring the safety and reliability of its models. With each new advance, the investment in development and compliance grows, which can easily outpace revenue generation. Now let's talk about the money flow. Current estimates suggest that OpenAI, despite its massive user base, faces considerable operational costs, salaries, server uptime, compliance, and ongoing innovations. As of the latest financial reports, these expenditures could dwarf income, leading to a scenario in which even a growing customer base isn't enough. And while OpenAI continues to expand, there's an easy misinterpretation of what this scaling means. More users can often lead to an increase in costs. It's not solely about growth, but about margin management and protecting the bottom line. The fundamental structure of their business model could mean that scaling up the user base without corresponding revenue growth can create a siphon effect on profitability. So, what changes are necessary for OpenAI's model to shift? One potential pivot could be refining the value proposition, all while parsing out customers willing to spend significantly on their offerings. If OpenAI could identify and cultivate a core group of high-usage clients who value enhanced features, this could fundamentally alter their revenue landscape. Alternatively, they could explore enterprise partnerships that guarantee longer-term contracts or scale pricing models that flex with usage levels. What does this all add up to for you, the investor or tech enthusiast? The takeaway is clear. It's not just about the spectacular user numbers. It's about understanding the business mechanics and the underlying psychology of payment willingness. The structural dynamics of profit margins are fluid, and what holds today could shift tomorrow. Keep an eye on how OpenAI navigates this landscape. It could reveal a lot about the future of AI monetization. One last note, the figures discussed here are drawn from publicly available data. Always verify before making any financial decision. This is educational content, not financial advice. This has been AI Finance Daily. Stay sharp. And if you want to keep thinking clearly about AI and your finances, follow the channel. We publish regularly, and every episode is built to give you an edge.